Hey, you rebels. So we got some fun things happening in the charts today. I figured I'd just do a quick little review here. So earlier we saw this massive fall last week. Major correction is basically like a COVID level event that happened, and we found support like dead on the 50% level of the entire bull market so far from from the 22 bear market to today. This is the 50% level, and as we've talked about, those are usually magnets in the market, and you would typically, if approached from the overside, typically do expect to see buying, and that's what we saw. Pretty volatile days in here, and so kind of mixed signals in a way. But one thing of note is that we have entered an uptrend on the daily time frame, and I mean this is a pretty significant, even just open today. That's like basically 8% on the S&P 500. That's an 11% day. Anyway, major push up from this significant point. And then I have this support line here from the yen carry trade fears, just because this was such a fearful pivotal moment that this is a chunk of price action that I would prefer to see us stay above. And so we'll see. Time will tell. This is all daily stuff too. It's like it gets a little noisy, but we are seeing some of the things that we would like to see from here. A nice push up. We're in a daily uptrend. And so we'll see how the week ends up closing. We'll have another weekly call later, but this was some interesting stuff happening that I really like to see. And I want to mention a few other things that I haven't really gone into before. So let's see. So this is a price of, or the price chart of Bitcoin up here. And then I have a few chunks of data down below. We have the aggregated funding rate. I probably won't actually get into that one today because it's just for another day, I think. But we do have the liquidation data here and aggregated open interest. And so you can kind of think of open interest as desire for leverage, basically. So open interest is going to calculate, or is going to be a measure of the open interest in leveraged positions. So it's a way to, in a way, measure the desire for leverage. And so as you can see, from here, as prices were going up, the interest in leverage is increasing. So you can kind of think of this as an inverse signal, not necessarily signal, but things to be paying attention to. So like, when we're up in these levels and we're seeing some major liquidations, I mean, look at this liquidation. This is the largest liquidation that had happened in probably over a year. Liquidations can also mark pivot points here. You see this long liquidation here was the largest long liquidations that we had seen in a very long time, which marked the low here. And this actually right here, at the time, it was an outside bar, meaning prices got pushed way higher than the previous days and way lower than the previous days. So it's kind of a shocker to the market, plus massive liquidations. At the time, I didn't view it as a signal per se in my mind, but at the time, I was thinking that this could definitely put a pause in things, just because it was such a whiplash day. Sometimes the market needs time to process those things, and then you can tell that basically from there we basically just chopped sideways before we ended up going down. So hindsight's always 2020. You can't, I'm not saying that I knew that this was going to happen, but because of these heavy liquidations levels and the type of candle that I saw here, I did expect to see somewhat of a pause, or for the market to need to digest that move. And in fact, you can see that we really hardly had, I don't think really had any significant price action above it, and no significant price action below it until recently. So anyway, really what I'm getting at is you want to be more interested in the markets when you're at lower levels of open interest rather than higher levels of open interest. You can see that like right here would have been a much more dangerous time to get into the market. That open interest being higher, and then also prices extended high as well. And you'd probably want to be more interested in the market when it's near its lows. Like if we just kind of expand this panel a little bit, you can see that right up here are relatively high levels of of open interest, and down in here, relatively low levels of open interest. So anyway, these lower levels of open interest right around in here would have been a better time to be interested in the market rather than when prices extended and we have a high open interest. So what I wanted to kind of just point out here was that we have kind of had a bottom in that open interest as well. So we will see what the reaction is from here. But that's just one other kind of little piece of the puzzle. We did have some major short liquidations recently, which makes sense because we did have a nice push higher there. One thing that I'm excited about is very, very early days, but the exchange volume, if I can get this to load. Go in here and expand this. What I've been looking for is a bottom here in the exchange volume, hopefully to hold above these lows. And so far, that's what we have. And what I really like seeing is that we were seeing as prices increase, so is the volume. Volume is a leading indicator because volume is money and money talks, right? What is the money actually doing? You know, and this is a leading indicator because back here we saw a decline in the trading volume well before the top was put in. Basically, this would have been the first peak, and then volume was much lower on that next peak, which would have been the double top. So that lower volume was a pretty clear signal that there wasn't actually enough money talks in the market at the time to support those prices. So what you really do want to see is an increase in volume as prices are going up. So early days on that one too. We'll just have to see how that ends up going. And I think if I just go in here quick, and I did a little screenshot of this earlier because I wanted to chart on it a little bit and see what I could find. And so I'll show you that quick. Again, early days, but I do like to see that we have just breached this downtrend. So what we want to see from here is higher lows when exchange volume comes back down, or see it base out for a while before the volume increases. But a hold above $50 to $60 billion a day would be a really nice thing to see. So I just wanted to point those things out. We have a lot of metrics that are way overdone as far as like the fear is extreme in the market, COVID level fears. And when you zoom out in the chart and look back, it really just looks like we've come back for a volatile retest of the highs before the market carries on. That's what it's seeming like to me. We'll see how the week closes. That matters more than what we're seeing today, but we are seeing a nice push and a nice positive reaction here. Again, with the volatility, it's as volatility increases, volatility the upside and the downside increases. What I do like to see is we have some nice weekly holds above this main trend line here, which is from the previous high to the March high, basically coming back down as it appears to test this cup and handle pattern. It's also interesting to see that Bitcoin is holding up stronger than the S&P 500. Let's just see what Bitcoin, I haven't even looked at this, but I'm just curious to see what Bitcoin has done against it's kind of crazy. It had a pretty strong push against the S&P 500. The S&P 500 is ripping today. So we are seeing that down day too, but Bitcoin has outperformed the S&P 500 during this crash, which is just interesting to see. We had talked about decoupling behavior before. Just want to make it very clear that was a one-day signal. That does not mean like, oh, look, Bitcoin's totally, acting different from here on out. It was just an interesting one-day thing to see like, oh, wow, this is some of the narratives behind Bitcoin being a hedge against this and a hedge against that, kind of seem to have played out in the very short term as far as that goes. If prices fall and we enter a bear market, Bitcoin's going down too. Like, no doubt in my mind. I think a lot of people are expecting, because institutions are here now, and you have nation states looking to put Bitcoin on their balance sheets and central banks looking to put it on their balance sheets. So demand is increasing quite a bit. I think that the narrative that the Bitcoin's going to not see a bear market, I think that's false. There's a potential that we see less severe corrections than we have before, but we're just going to have to let time do its thing. So, yeah, anyway, that's basically all I have for today. One thing that I did today, just because I like to just kind of show what I see and track it. I'm wrong sometimes, and then I have, it's like that's the whole point. It's like the point isn't to try to be right every time. It's how can I be wrong several times and still win? So what I have here is a price chart of Beam, which is a gaming token. It's like premier gaming token. And we've just been in this giant range for since inception, basically. And we had a massive break below, a push up to retest, come back down with a higher low, which is what I like. But this run up right here, this push right here was an overbalance in time and price, meaning it had pushed higher for longer than any time during this downtrend. That was a good sign to me and came down to test lower prices and formed a higher low so far. And so on the very, very short term, we've entered a daily uptrend on Beam, broken out of this downtrend with a larger macro higher low forming. And so, yeah, so I entered a small position right on that break because that's one strategy is to go with the trend. And so as the trend turns to a positive trend based on this, I'll go over more Gann analysis later, but it's using this swing chart to find a mechanical time to enter instead of just guessing where the dip is, like right down here. Yeah, of course, it would have been nice to buy that. There was no confirmation and prices could have kept going lower. You don't know. And so having this mechanical process of, we are technically in an uptrend based on this swing chart gave me a little bit more confidence. And then, of course, I have my stop loss below this swing because if it does go below that, then the thesis is invalidated. And so, as you can see, I mean, if we zoom this out, I mean, the risk to reward on this is so fucking ridiculous. It's like, what are we at? Yeah, it's like a 31-1 or something like that. So like legit, you could be wrong 31 times or 30 times and be right once for a break even, So anyway, that's kind of what I'm saying. Like the risk to reward down here is much more favorable than any other times that we see. It's early days. Altcoins are very volatile. They can go the other way. You have to understand that. So, in this trade, I think I have $300. I know that if it goes against me, I'm going to lose $300. And let's say I have $1,200 that I want to allocate to a Beam position. Okay, well, depending, I mean, with the way it stands right here, I think this is, yeah, I think I did 4x leverage because that would give me a 25. No, I did 5 because that would be 20%. And that would kick me out right down at these levels. So basically what I've done is I've used a 5x leverage. So if the price goes against me 20%, I lose my money. But I only had to put up $300 for the trade. And, a 5 times 3, you get it. So like $1,500 position for $300, right? $300, 5x leverage. That's fine. 1,500, right? Yeah. Anyway, just wanted to showcase this. And I do this a lot at bottoms where, okay, I've seen signs of strength. We have the overbalance of time and price. I mean, the major one to get above would be this. But I can be wrong here, lose the $300 and do the same, maybe not the same exact risk to reward. I might have to use 4x leverage or something like that. But yeah, I'm not advising anybody do this. I just kind of like to show where I'm at. If you just wanted to buy Beam right now, I think would be an amazing time to start dollar cost averaging a position. And maybe with stop losses below here, because if we do go below here, probably likely to see more downside. You take the loss, you wait for, some more signals and go from there. So anyhow, I just opened up the position on Beam today just because we have the momentum to the upside. We technically got into an uptrend, broke this downtrend. And so we will see. I think once we're safely above this trend line right here, if that were to happen, I would probably just move my stop loss to just above break even. And then that's a risk-free trade. You spend $300 and for the potential, and then here's the deal. So I spent $300, got a 5x position, that's $1,500. And, then $1,500 times 6, I'm not going to do the math, but you got to see that spending $300 for the potential to make that kind of money, you can be wrong a few times. You got to pick your entries, and you may be wrong, but if you design your own thesis and your own trading styles based on the information that the market's giving you, that's what you can do with that. I used to just jump into a position, not do a stop loss. Stop losses are great for this style of trading. Otherwise, if you had $1,000, maybe you put $200 into it today, and over the course of the next week or two, unless prices go crazy, if we're down in this zone, maybe you average a price, whatever, and then you just walk away. You don't have to worry about it too much. So anyway, I'm going into the weeds on that, but I was just kind of wanted to show things that I'm looking at. It's exciting to see that the markets are reacting so strongly from this pivot point. The other fun thing, and this is early days, but I want to show this. I had the video on it earlier, talking about different projections that we had. We had a double top projection, a reverse head and shoulder projection, and that was this line here. And so I created this little box where I expected to see buying, and you can see, let me get rid of this projection here, and you can see very clearly that that's exactly where we ended up seeing buying pressure. It's early days. It could go against us, in which case we'll have to revise our targets to the downside. But so far, it would be really nice to see a close above this, because this right here is a fourth time breakout signal, and we did have a nice genuine move, but a close above that might start to invalidate this as well. And what I'd like to see as far as this double top projection goes, if we can start seeing that also lines up really nicely. This 50% level here breaks above these tops, breaks above this trend line, and closes, especially weekly closes, will be a really strong sign. So anyhow, I think I've overdone it for today, but I just wanted to say positive sign off the lows. A lot of metrics, extreme fear in the market, usually at lows. Open interest was at all-time lows. And I haven't even checked on the volatility, but we can get into that later. I don't have it on the chart now. So yeah, and just starting to look into getting different positions. We'll just see how it goes. I have alerts set for overbalance and time and price on a lot of these. Beam just happened to have already done that, and so I felt a little more comfortable starting to acquire positions, right? Rather than trying to catch the falling knife. We have no idea how far they can go. Start to get signals that we have strength to the upside, and trend changes, be a little bit more confident. That being said, it's a moving target, and you have to have a plan. I have a plan for if it goes against me. I'm here very excited, very bullish right now, but I have a plan if it goes against me. I know exactly when I'm going to get out. That's the kind of thing that I want to teach as much as I can, because it's not about finding exactly, no signals work 100% of the time. It's just not how it works. If it did, then it would immediately lose its edge. If this works every time, well, then everybody would do it, and it would cease to do the thing that it always has done. And so, the market's kind of always a moving target. But what I want to showcase is that you can use the price data and technical analysis to get an idea and help, solidify your own thesis, and then make decisions based off of that. So, and hopefully make it more of a mechanical process with rules, so that you're not investing emotionally. Like right now is a very exciting day because it seems like markets are off to the races, and so you have to be careful not just jumping into the market thinking that, okay, the bottom's in, we're great. We need more confirmation of that. We'd like to see more strength, but these are early days. And so if this proves to be the bottom, it will be clear in hindsight a month from now, several weeks from now, it will be clear. But it's not clear right now, right? Like those are the things we have to keep in mind. So anyway, I'll stop babbling. I'll definitely see you guys on the weekend we'll see how this weekly candle closes, but it's exciting to see. It's exciting to see that we're seeing strength in Bitcoin right now, and we'll just see how strongly it closes. Nothing really is happening in my mind until we break this downward trend line. So we have this downward trend line, and this is some very key support we would like to stay above. And in fact, just use this 50% level here. And something I like to do in my mind to think about is basically, if I do this like that, Sometimes I draw these little triangles here, and it's basically, well, I can even do this. I'll draw this triangle right here because basically anything in this zone is indecision, and in fact below. But especially in this zone right here is we're still in indecision. We don't exactly, the market hasn't given us clear signs that we're going down from here or we're going above here, but we're kind of in this no man's land. And so sometimes what I'll do is I'll be like, well, if price just went straight flat from here, when could we experience, a breakout or something? I'll use it like almost as like a time analysis to see when could we expect it to break this zone, and so like mid-April. So, we could have signals sooner, but I like to keep myself in check and not expect, things to be so apparent so quickly. So yeah, anyway, as long as we're in this zone right here, we don't know if we're going above because we have resistance here and we have support here. Anything in this zone, kind of indecision. So we'll just kind of pay attention and see how it reacts. We're definitely at a crossroads here, I would say, and have been for a little while. But yeah, I would say indecision until we can, have nice, clear trends above this 50% level and above this trend line. And better yet would be breaking above this double top would be a really nice signal. It has a lot of confluence with this level here, that 89,000-ish range would give us a lot more confidence as well. So, all right, enough blabbing from me, you guys. I'll see you next time.